base argument that we're making here is that Tesla makes better EVs than anybody else, and that's been demonstrated a number of times. If you look at what's happened with the competition so far this year, they basically failed, including the Audi. If this continues, this company can ship more than 500,000 cars next year, and if they do, the stock should be worth what I say it is. And just for the record, I'm suggesting that the stock should be valued on 15 times next year's EBITDA. So it's all about the volume, and it's all about the fact that literally no one can catch this company in terms of the quality of the product.
Volume, quality, first mover advantage, Brian. Why is it going to 150?
Yeah, I think what Tesla's doing, product attributes aside, is cutting price, cutting model mix to move the metal. And at some point, investors should look at this and say, let's say it makes 1 million cars. Why should it be worth more market cap than a Ford or close to the market cap of GM and Ford, which make 4 and 7 million? So I actually, in my models, have them getting to over 1 million in the 2020s. I just think if you look at the profit margins on that, and yes, there will be more competition coming in. Yes, they need to kind of push down to get those volumes into a lower price point. I just don't see the iPhone-like earnings power to justify a higher valuation.
Is it fair, Brian, to compare Tesla to an established legacy player like a Ford or a General Motors when it comes to valuation? If you take a look at, Tesla sort of in a startup mode in some respects in terms of grabbing market share and in keeping its dominance in this emerging EV field.
Well, let's look at the gross margins and strip out the regulatory credits. They're about 15% ex all regulatory credits. You take out R&D and you're closer to the 7 to 10% that the legacy autos actually post as their gross margin. So that's a number that kind of, yes, I know the earnings are reflected by SG&A, although they've held that flat. They've held CapEx down, reflecting kind of, are they really kind of being a growth company? So if you just kind of look at it at core gross earnings power, really at the how does that significantly get better, especially when we've seen with the 3 coming out, it's really cannibalizing the S in particular. No reason to think the Y won't do something similar.
I mean, that's fair, Joe. I mean, we have seen the numbers for the XS as well as the X come down, and that's the projections on Wall Street that the number of S's and X's sold and shipped this year will drop fairly precipitously. Is that a sign of cannibalization, or is that just an evolution of the Tesla model?
Well, I think it's an evolution of the Tesla model. If I may, I'd like to return to one of the comments that was made earlier about how this company should be compared to existing auto companies. I take the point about the margin. If this company can't become more profitable, that's fair. But Tesla literally grows at 10 times the rate of the established auto businesses. And so to simply say it should trade on the same multiple flies in the face of basic financial analysis. So I do think that you have to take that growth into account. But fair enough, if it turns out that this company's not capable of making money, I'm wrong. I will say that we were pretty close to right about what the cash was going to do in Q1. And I think this company is going to generate $500,000, leaving the deal aside, $500 million, excuse me, in cash in the second quarter. And if it does that, then I think the onus is on the bears to explain how this business model is not sustainable.